We're already seeing it in many places, but even in the broader-based indices, and the Fed will have to adjust, and we'll be on the other side of the horror show we just went in.
Today we have the latest interview with the CEO of ARK Invest, Cathie Wood, giving us a market update for 2023, as well as what we can expect economically in the last few months of the year. Wood points out that interest rates have increased significantly in 1 year, which is a major shock to the system. However, Wood believes the Fed is not acknowledging the stress on the banking system and says the coming government shutdown will trigger a major event. She discusses the Fed's next plan to raise interest rates and believes this is a huge mistake. She compares the next massive hike to the early 1920s, when we saw the beginning of the Great Depression. With higher rates meaning more expensive borrowing costs, Wood believes right now we're on the verge of tipping the economy into an unnecessary and deep recession. She also talks about the effect the Fed has had on the stock market and ARK's share price after raising rates a record 21 times over the past 2 years. Let's check out the latest interview with Cathie Wood as she talks about her outlook for 2023 and what economic indicators we can expect with inflation, the stock market, and what ARK's investment strategy will be in the coming months. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here on this channel. Let's get right into the video.
I think they should put into context what has happened in the last 2 years. Interest rates, the Fed jacked interest rates up 21-fold. Any long duration asset, and in the world of equities, innovation is going to be the longest duration. All long duration assets were slaughtered last year. The bond market, now that's long duration as well, but it's usually a flight to safety vehicle. The bond market last year had its worst year since sometime in the 1700s. If that was going to happen to bonds, which are usually flight to safety, just because they were long duration, that was going to happen to ARK in spades, and it did. Now, where are we? The market is starting to look to the other side of the interest rate increase, and they're starting to look at inflation, which is crumbling. Inflation is crumbling. I know that a lot of people use the word sticky, but you look at the leading indicators of inflation, they are coming down rapidly. And we do believe we're going to see deflation. We're already seeing it in many places, but even in the broader-based indices, and the Fed will have to adjust, and we'll be on the other side of the horror show we just went through. I don't think we've been wrong about it. When we were in COVID, we were talking about inventory shortages that would cause supply chain problems and the inflation that would come from that. But I think when history is the judge, and it will be, history will judge the inflation we went through as the result of a massive supply shock to the system. And they will look at the comparison, not to the 70s, which I know Larry Summers and Mohammed El-Arian and others have used that analogy. We were on the gold standard, so money supply had to fall as inflation went up. Inflation went to 24%, June of 1920, dropped to minus 15 in June of 1921, and we moved into the roaring 20s. Why? Massive innovation, telephone, electricity, automobile. This period is much more like that period than like the 70s. And again, history is the judge. It will look at the inflation chart, which went like this and is going like this now. And it will seem like it happened in a flash, even though going through it feels like we're in slow motion. So we started our research on artificial intelligence, actually when we were studying the possibility of autonomous vehicles way back in 2014. NVIDIA at the time was $5. That's on the split basis, $5. Now it's closing in on $450. So we rode it all the way up until mid to high 300s in the flagship. Sold it because we saw the inventory problem brewing. That was a good call. Got back in the fourth quarter when it cratered. And then it just took off after ChatGPT, while all of our other stocks, many of them AI driven, I would say most of them actually, were still very, very weak. Mm-hmm. And just to give you an example, NVIDIA was at 25 times revenues, while Twilio, which we think is going to be a huge beneficiary of AI, was at 2 times revenue. So we were making a valuation judgment call. We had done very well, 5 to 350 to 400. And we also kept it in our more narrowly focused portfolios, but took profits there as well. I think a lot of people understand that NVIDIA is just an incredible play on AI, and it is priced accordingly. Who are going to be the winners in AI? It is going to be companies with visionary managements, good distribution, global in this case, and proprietary data. And we think the secret sauce and the real beneficiaries of AI are going to be those with proprietary data. The biggest one being Tesla. More data on real world driving miles than all the other auto companies and tech companies focused on autonomous in the world.
Despite a slight easing in price pressures last month, officials are cautious about declaring an end to their efforts to combat persistent inflation. The central bank aims to avoid repeating the mistake made in the 1970s, when premature easing of inflation control led to a resurgence of double-digit price increases. Federal Reserve Bank of San Francisco emphasized that it is too early to claim victory over inflation. These expectations have driven stock and bond prices higher, indicating market confidence in the Fed's intentions. It was also announced on Friday, ARK Invest cashed in on the recent record rally in Coinbase Global stock by selling nearly 500,000 shares, valued at just over $50 million. And while the cryptocurrency exchange remains among their top holdings, the second half of 2023 will be interesting to watch, as we round the corner before the Bitcoin halving in March of 2024. Cathie Wood notes the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to opposition from certain figures, she believes that the conversation alone will benefit the crypto market, leading to potential growth opportunities. She also touches on the current monetary policy, where Chairman Powell refers to it as restrictive, raising concerns about inflation rates. The potential rise in real interest rates could impact investment decisions, making investing in alternative assets like Bitcoin and other cryptocurrencies more attractive due to their inflation-resistant properties. What do you think about the latest interview with Cathie Wood and her insights on government debt, rapid economic growth, and the ever-evolving landscape of cryptocurrency? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.